Good morning, everybody. Hey, welcome to this Friday. It is the 16th of February. Hope you've had a great week. And we're going to talk about what's happening in the market here in just a few minutes with Dave.
105.7 Light FM. Outfield is there. Morning Dave is here. I hope you are too. I appreciate you. Phillip Statler's here too. And I'm really glad he is this morning because I think this is going to be one of those days where what I see on my delayed quotes on the futures ain't going to be what it's going to look like when we give you the numbers today. Let's check in on your finances and see what's happening. Phillip is on the phone this morning. How you doing, sir?
I'm doing well today. How about you?
I can't complain in the least. There's sunshine outside, and I'm still crossing my fingers that I'm going to get in a round of golf before the rain starts tomorrow morning, because the weekend does not look real good weather-wise, does it?
It does not, no matter where you are. I'm sitting here looking at St. Pete Bay right now. And so it is kind of a partly cloudy day, but I know it's supposed to rain cats and dogs Saturday and Sunday.
Yep, starting sometime tomorrow morning, we're going to see it. If you're staying over there, you're probably going to hear it about hour and a half, 2 hours before us. If you get a break to get some sunshine, do it today, because I think you're washed up tomorrow.
I think so as well.
By the way, just a side thing that has nothing to do with what we're talking about here. My friends at Highlands Hammock State Park called to tell me about an hour ago they've canceled music in the park for tomorrow night. The weather forecast just looked way too greasy, so they said to heck with it. Which doesn't surprise anybody too terribly much, but I feel a need to pass it on. Set the table yesterday looked like one of those full recovery days. I mean, that precipitous drop we had after the CPI report earlier this week, we've pretty much gotten it all back again. The Dow was up by 348 points. The NASDAQ now up to 5,029. We went up by 29 yesterday. S&P rather, the NASDAQ went up another 47, so it's over 15,900. Boy, things look so doggone good. And then we got the producer price index inflation report in this morning, and they were expecting a 0.1% increase in wholesale inflation. We got a 0.3% increase, 3 times what the economists expected. And this time it wasn't just energy that did it, because the core, they expected a 0.1% increase, and producer price wholesale inflation at the core up by 0.6%. And when I first got on the phone with you this morning off of the instant tick non-delayed quotes that you guys in the business get, I got to assume that things kind of turned south as soon as that came out.
It did, Dave. As soon as those numbers came out, it was a rock. Not as bad as the other day, but it started to fall pretty quickly to the, we got the Dow down 0.33% now.
Now, given the fact that it was just frittering around the zero mark about 20 minutes ago, that's not what we were looking for. Other data dump information out of the government. We got a housing report this morning and basically got the same thing. They expecting building permits to go up in January by 1.5%. They declined by 1.5%. And housing starts last month fell by 14.8%. If anybody thought we were in full recovery yet, I got a bulletin for you. We ain't quite there yet, are we?
No, and that's a pretty big drop. Now, you don't know how much of that's weather related and that type of thing, because there's weather across the United States that's going to be different than what we get here in sunny Florida. But they haven't had any major snowstorms, I don't think, until this last week or so. So not sure what has caused that.
Unless it was California with the, what do they call it, an atmospheric river that gave them so many weather problems. The rest of the country was reasonably quiet last month. So California could drag us down a little. I'm not sure a 15% drop would be something we could blame on the water in California. Do you?
I don't think we can. We can blame a lot of stuff on California, but maybe not that.
Yeah, I like blaming California, but I can't do it all on the housing starts. All of that rolled into a ball. Step number one, it kind of moves the expectations back for the Federal Reserve dropping interest rates anytime soon. It kind of makes that a firmer expectation they're going to hold steady. And it also prompted a bunch of major economists to drop their estimate as to what the first quarter gross domestic product is going to look like, because we'd been going up like a skyrocket. well more than anybody would have expected the last two quarters. And I got a sneaking hunch the first quarter isn't going to be half as pretty as those 5% bumps we were seeing at the end of 23.
Yeah, I don't think so. I think I've read a couple of different articles about the volatility seems to be one of the things we're going to have this year for probably the foreseeable future. Several economists think that we're just going to see this volatility. It's here for a while.
Absolutely. And just every time we get a little bit of bad economic news like we're getting this morning, looking at what happens in the market pretty much gives you the idea. Add to that the fact that we're going to be a little hinky today on general principle anyway, because Monday is President's Day. The bond markets and the stock markets are all going to be closed. So we're going to have a lot of people making adjustments, taking money off the table simply because you don't want the government messing around with your money for 3 days when you can't do anything about it. So it's going to be hinky at the end of the day anyway, I assume.
Yeah, I'm thinking so too. Coming into a 3-day weekend for the markets. And next week, Dave, we have the minutes from the Fed meeting get released on Wednesday. So the Wednesday afternoon could be a little volatile as well.
Given the fact of the events of the last week or so with the economy, I got a hunch that's probably going to be a bigger market mover than it normally is. Not a lot of reports that are floating around out there this morning, but one of the ones I had a news tip on it about how Coinbase's stock was up like 7% yesterday after they swung to a profit, which is one of those things. I mean, they were 1 foot out of the grave about a year ago. How did they do anyway?
Hey, they had a good quarter, Dave. The first quarterly profit they've had in 2 years. Obviously, a lot of that's come because of the ETF on cryptocurrency. So that's been a good thing for Bitcoin. The ETF there, that's helped them quite a bit. They saw their net income up to $273 million this last quarter, which was good. I think I saw they had a 40-something% increase, 50% increase in gross revenue this last quarter. So some good things happening for them with all the stuff happening with Bitcoin. They're trading up today, huge, 14.3%.
Wow. The existence of that exchange-traded fund trading on cryptocurrency, it just kind of legitimized it as an investment tool for people that are willing to take a substantial risk but have a pretty substantial upside. Suddenly it's become a legitimate tool, and that kind of helped companies like Coinbase that were under the radar for a while.
It did help them, and obviously so. They had a pretty good quarter because of it.
Cool. I had one tidbit down the line. We've been talking about the employment picture. We're always concerned about how the first-time unemployment claims are running so doggone low and, really abnormally so for a normally functioning economy. It's always been the high-tech firms that have been laying people off. Nike announced almost 1,700 layoffs in this country this morning. So we're seeing some of the blue and pink collar layoffs now starting to show up. That's not a trend necessarily, but that's not exactly one of the high-tech firms that we've been looking at and saying, oh, well, they overhired to begin with.
Well, yeah, that's right. They've been, that's a big number here, especially if it's all coming to the United States. That's what you don't know either, is where's it coming from. But hey, I do have my tip sheet just finally hit. I do have Roku. I did see an article about it earlier, but I've got the exact numbers now. So Roku not doing well this morning, getting hit pretty hard. They had a 55-cent loss this last quarter, which was more than the 52 expected. Even though they did have an optimistic first quarter revenue forecast that was above estimates, that loss is really pushing them down this morning, down 17%.
Woo!
Yeah.
Roku is kind of coming under my heading of high-tech dinosaurs. I mean, they were doing streaming boxes for TVs before it got trendy. Now all of a sudden they're one of the old guard in that industry, and Google's got their own, Apple's got their own in-house streaming stuff they're putting into TVs. Roku's kind of in a position of needing to reinvent itself, and it's been doing it to a large part by licensing the Roku software as being part of television sets. Doesn't sound like that's doing all of it, does it?
Not helping a whole bunch, at least not this last time anyway. Hey, we had DraftKings come out. DraftKings, the sports betting site, they did come in and they lost 10 cents a share. They were expected to have a profit of 8 cents a share. So that's an 18-cent miss on earnings. Revenue was a little less than expected. They're not, at least earlier this morning, they weren't getting beat up too bad this morning. They're still down less than 1%. The other one that reported was DoorDash. DoorDash kind of falls in line with that Uber and Lyft mentality. They had a rough quarter, Dave. They lost 39 cents a share. They were expected to lose money, but they were expected to only lose like 16 cents a share. Revenue beat on estimates, but and they authorized a repurchase stock program of 1.1 billion, which a lot of that sounds like that should be helping build up the stock, but they're still falling this morning, down 8.5%.
Whoa. Well, I suppose if they're doing the stock buybacks, that's good for them being able to buy it cheaper than they think they're worth.
Well, that could be too, and that's that could be help building the stock back up too. Not falling as much.
Backhanded positive. Resetting the table yesterday looked for all the world like recovery was complete after Tuesday's debacle. We had up numbers and some pretty big up numbers in all the primary indexes. Then we get to this morning, and I just had my futures update on my delayed quote, and I'm not sure I like what I see. 45 minutes before we open, what does it look like?
Well, there's some red ink there, Dave, for sure. We've got the Dow down a little over 1/3%. The S&P 500 is down almost 1/4%. The NASDAQ 100, not the NASDAQ, but the NASDAQ 100 is basically flat right now. And then the Russell 2000 is getting clobbered this morning. It's down almost 1.7% before we get going. A big drop there. On the other side, we got silver finally back over $23 to $23.05. That's up almost 0.5%. However, gold's not going that direction. It's down not quite 1/10%. And then crude oil making a huge jump from yesterday when you and I spoke. It's up to $78.20 a barrel. That's up 1/4% from yesterday's close.
Yeah, and I'm seeing them all up from the delayed quotes that I'm looking at, too, so I think I got an idea where the money that's going out of the stock market is going this morning. Commodities of the moment. Looking across the pond, the Asian Rim market almost universally up at the close this morning. On balance, a little under 1%. It was a pretty good day in the Asian market. Over in Europe, they're still up. They haven't really responded yet to the sell-off on our futures market. The overall European index is up by about 0.5% halfway through their trading day. Getting your retirement on track counts for a whole lot, and it counts even more the closer you get to actually planning on using that money you've got in your IRA or 401k. How do I find you to stabilize my plans so I know I'll be able to retire someday, Phillip?
Dave, that's why I developed the core retirement design to really help folks design that retirement they always dreamed of. Check out the risks they have and make sure it lines up with where it should be. Give us a call at 863-382-0037 to schedule your core retirement analysis. Check out our website at statlerfinancial.com and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And we'll be back here on Monday morning to tell you what's going on around the world, even though our markets will be closed on Monday morning. Phillip, I'll catch you next week, all right?
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Do you actually...
Hey, folks, again, I want to thank you for joining us today. Have a great weekend. I look forward to speaking to you again on Tuesday. Take care. Bye now.